Hi traders, let's take a look at the upcoming CPI US inflation data and report that's coming out in a few hours time. But before we get into that, I just want to point out that Twitter and the Bureau of Labor Statistics has come out and discredited already a false document. You can see the photo in front of us there by the White House press secretary coming out with the data a day before the data is due to be released. So they're saying it's not true and this isn't real data, and the data will be coming out in a few hours time. And I guess this adds support to Elon Musk's argument saying that he needs to pay less for Twitter because of all this fake information. Now, as far as the CPI data coming out tonight will be, the White House has expected June's consumer price index figures to be highly elevated. However, they are suggesting that gas and food prices, which continue to be sort of heavily impacted by the war in the Ukraine, but they are saying that those prices are starting to fall as well. So already this data could be a little bit behind the times. Now, the other thing I want to look at to get a bigger picture of the last 20 years. So I'm going to show you two charts here. So this is the CPI data up the top and the core CPI data for the US down below. And this is over the last 20 years. So the last few years I've circled in red, and that's from 2021 onwards. And you can see that you can actually give a really good indication of just how big a problem this inflation has become in only a couple of years. If you look at the core CPI data there, which is excluding your energy and food, for example, you can see a massive breakout has occurred there. And that is the issue that we need to be dealing with. Now, Joe Biden isn't coming out and saying that we have reached peak inflation. They're not ready to make that prediction yet. Now, joining me to look at the charts and look for trading ideas on the back of the CPI data is our own senior market strategist and trading mentor, Duncan Cooper. Hi, Duncan.
Hi, Nathan. How are we doing? All right, so I've got the Euro-dollar daily chart in front of me, and what I've actually done is just put in some arrows showing you when the CPI data release has been happening from February onwards, February, March, April, May, June. And really, on the release of the data, back in February, we had a slight positive day at resistance, and then, all the other releases have really been negative in terms of price action, following on from the data release. So can we get some really negative news that can change a trend? Probably not. We might get some negative news that might just uplift price action a little bit for a day or two and just give a trade an opportunity to sell down from maybe a good resistance level. So hopefully everybody can see here we're in a clear downtrend. This week we moved below a monthly level of support from back in time at 101.18. And lo and behold, yesterday we did hit parity. I think we traded below, about a pip below. So if I just drop this down to a 15-minute chart just to have a look at some levels.
Is it time for a parity party, Duncan? Or...
Well, who knows? I mean, we only managed to bounce yesterday 70 pips from parity. So it wasn't like, okay, everybody's getting in to push this up 200, 300 pips. So at the moment, we've just had a 70 pip bounce. And all it really did was we broke below last week's low. And then yesterday, the bounce just got us back to finding resistance at last week's low. So if we get some negative news today, maybe we can come back up to retest last week's low, or maybe we can go a little bit higher up to the 10100 level, or the broken level of monthly support now becomes new resistance at 101.18. So just looking for, can price just pop up to a level of expected resistance to trade down from over the next 24 hours?
Brilliant. Thank you very much for your time, Duncan, and your insights, and happy trading, everyone.